a lot of the businesses in 22, 23, 24 started to come out of sort of, I call it like the stimulus hangover, and they hadn't handled their money wisely. They had blown a lot of it, and their product input costs were going through the roof. I mean, things were costing twice as much, three times as much. I mean, crazy increases to input costs, and the business owners just didn't really understand what was going on. They couldn't pass the cost along to their customers. And I just saw more and more of this. And I, as a Bitcoiner, I was like, I know the problem. I know exactly what's going on here. Um, how do I, how do I communicate this to these businesses? I can't really be like, hey, put a bunch of Bitcoin on your balance sheet, especially as you're struggling. You needed to do this when you got the money. It's too late now. And was just looking for opportunities in the space to take my skill set, apply it in some way, shape, or form to something in the Bitcoin world. I didn't really know what. I had been looking. I applied for maybe some like accounting jobs or some sales roles, or things that really weren't suited, but I was kind of just trying to get out of the corporate world, and they weren't great fits, but it was like I could make it work. And then I saw a post on bitcoinerjobs.com for a consultant role at Sovereign. And it was exactly what I was looking for, helping businesses understand Bitcoin, adopt it, put it on their balance sheet, before they start to have trouble, get ahead of the problem. Prevention is worth, or what is it? An ounce of prevention is worth a pound of cure. And I was like, okay, this is our awesome opportunity. Came onto Sovereign as a consultant in November of last year. I actually got approval from my corporate overlords to do up to 5 hours a week of consulting for businesses. And then I had a lot of a really unfortunate situation happen at the place I was working. And at the same time, I've basically been told I was incapable of handling a deal that I, had been doing this for almost 20 years, like handled many deals like it. It was a very odd situation, a very weird decision by the people in the C-suite of my company. And at the same time, Daniel, who we talked about earlier, was asking if I wanted to take on a more prominent role in the company, help get some of the stuff off his plate, more of like a COO or co-CEO type role. And I said, yeah, I would absolutely love to do that. But if I'm going to do it, I need to commit full time. I need to I need to not have one foot in both worlds. And if we're going to do this and you're okay with it, then I'm going to leave my old job. And it was, not coincidental that that situation had happened. And I just kind of said, I'm going to go do this full time. And Daniel said, absolutely. If you're willing to do it, let's do it. And so I went on paternity leave. We had our first kid back in January, and the hour back in the office from paternity leave, I walked into my boss's office and put in my 2 weeks and told them I'd be coming to run this company. And that was back in March. And here we are 6 months later. And it's one of the best decisions I've ever made in my life. So
I love that. What's your take on the rising of Bitcoin treasury companies? This cycle has been tremendous in that, because of I thought with Saylor coming in 2020, I thought more more companies that adopt Bitcoin on their treasury will come. And it was a very slow start. I mean, we had some prominent people. We had we had Tesla, we had PayPal, we had a lot of interesting projects, but not a lot. And now still we have not a lot, but it keeps accelerating more and more of businesses actually putting Bitcoin on the treasury. How do you take that?
Well, I have so many thoughts on this, and we won't get into all of them. I mean, I could do 3 hours on this subject alone, but I think there's a difference between what you're talking about in terms of PayPal, Tesla, and even MicroStrategy at the beginning, where they were basically taking profits from their business or some capital, putting it into Bitcoin. And it's like, okay, this is shoring up our balance sheet. This is a capital reserve asset. We're going to use this for capital projects in the future, for dividends, for distributions. It's to hold our savings in a better money. And it's turned into this sort of financial engineering alchemy thing that was inevitable. I mean, Pierre Rochard wrote about this in 2014, one of my favorite Bitcoin articles of all time about the speculative attack. Like, this was inevitable. And you have A plus players at that game at a company like Strategy who are just they're the Michael Jordan of that game, of the fiat arbitrage game. And I listen, there's clearly a demand for the products that they're putting out there. There's a demand for people who don't want to hold their own Bitcoin. And I find that disappointing. I find it unfortunate that pensions, hedge funds, individuals are so lazy that they're just like, oh, I'll just go into my Charles Schwab account and get this paper instrument, and I'm not even going to learn anything. I'm just going to get something because it's in the news, and this is an outlet to do it. I'm so scared of losing my job as a hedge fund manager. Oh, what as a pension manager? What an exciting career! I get to sit and earn 3.5% for a bunch of British people. Like, awesome. I'm so scared of losing that job that we're just not going to buy any Bitcoin, or we'll buy some like third order derivative of a preferred offering, and that'll get us an extra 2% in our portfolios, and I won't get fired. Like, so I this was inevitable. It was going to come, and there's in my mind there's Strategy, and then there's everyone else. There's all a bunch of copycats, and I don't really see any differentiation between. Now you have some company like a MetaPlanet, where Japanese is such a closed off. Japan is such a closed off economy, and they've tapped the Japanese market. Like, okay, I get that. That makes sense. You're going to get a bunch of capital from Japan. Maybe there's a play in pick your other country that has closed off capital markets. But outside of opportunities like that, I don't really see how there's going to be a benefit for company 8, 9, 10, 11. What excites me and what we're trying to do at Sovereign is, like you were talking about earlier with Tesla, PayPal, companies that are profitable, storing their profits in Bitcoin. And that's the quote unquote treasury company that gets me up in the morning, that's excited about what we're doing here, is people actually producing value for the world, making things, products that people want to buy, and doing it profitably, and then taking that profit, storing their time and energy in a better form of money, and using that to capitalize their business. And that's what I look forward to. That's what's exciting to me. The financial alchemy is all, it's going to happen. It's going to be done. It's going to take, maybe, I don't know how long it's going to take until these people, these fund owners, these, or individuals just start saying, I'm not going to contribute to my 401k anymore. I'm just going to buy Bitcoin. I mean, I think that's, decades and decades away. That'll eventually happen. And then in the interim, we'll get all this stuff that doesn't really excite me or get me going. But companies that are profitable, putting on their balance sheet, I mean, even there's just no reason Amazon shouldn't do this. Apple shouldn't do this. Like, that's exciting and cool, is when companies like that start saying, hey, we're going to take a portion of our cash and put it on here. We're not going to do a stock buyback. We're going to buy Bitcoin instead. Not like, hey, we're going to issue some Class B preferred stock and give you a 10% coupon, and then we're going to go buy Bitcoin with that. I don't know. Like I said, it's going to happen, but it just doesn't excite me. So,
Could those Bitcoin, like those fiat game Bitcoin treasury companies, let's call it call them like that, because my podcast also stores all the wealth in Bitcoin, and I could be called the Bitcoin treasury companies, and I'm very far away from that. Um, could those fiat game Bitcoin treasury companies like mostly go to bust? I say mostly because I do think they provide some service, but like I don't know if we need like 100 of them.
Well, I would say as long as your leverage is below Bitcoin's CAGR, I think you should be fine. Um, that's theoretically, right? So the question is, when do you get caught off sides in that it's a trade at the end of the day. So you're levering up your company, you're taking on leverage. When is the drawdown more than your base plus the appreciation? So as long as your Bitcoin is appreciating and you're quote unquote responsibly levered, in theory, as long as the fiat system exists, you can make it. It's just the companies that are going to get cleaned out and people are going to get wrecked on are the ones that over lever. And that's the problem with this whole play, is that to differentiate yourself, they have this metric, right? Like a Bitcoin per share or whatever it is. So you're constantly trying to increase that. And the only way to increase that via financial alchemy, not running an actual profitable business and making tons of money on really good margins and then plowing that back into Bitcoin, is to go farther and farther out on the risk curve, which requires more and more leverage. So, um, as long as you don't end up too far down that risk curve, you can survive. The question is, what is that number? When is the time? And you're basically just a day trader at that point, trying to figure out is what's Bitcoin's appreciation versus my leverage. And I don't know. I would not like to be kept up at night thinking about those things or trying to toe that fine line. And that's why I say there's strategy, and strategy is so far on. I think they have like 13% leverage or something. Like they'll be fine. Um, Assuming they don't go out and 4x their leverage or something like that. They're going to be fine. But like these other companies, it's just a game at the end of the day. It's a game of fiat arbitrage and towing the line between your leverage and Bitcoin's appreciation. And I don't know. That's a dicey game that I don't want to play. So
How is that actually measured? How much leverage you have? Is it that the depth in association with how many assets they have, or in association with like their market cap, or like how is that measured?
yeah, so there's different metrics. I think the what I was talking about, the 13%, I think is the amount of claims owed by MicroStrategy compared to their Bitcoin stack. That's
Okay.
So yeah, they're like in a different stratosphere of they have so much Bitcoin and so little relative leverage that it's kind of real. But some of these like other companies are they're over 50% levered against their Bitcoin, and I don't think that's going to end well if and when we have a big drawdown here.
Yeah, over 50%. And why? I don't fully like. Why is it a problem? Why is like a problem if the leverage is above the Bitcoin CAGR? I mean, I like, just full disclosure, I don't deal with debt. I don't like leverage. I got Bitcoin income more than I have Bitcoin expenses. So that's why I came to the conclusion of like, oh, either I go into debt with fiat, to being able not to sell my Bitcoin, or just sell my Bitcoin every month a little bit. Like selling sounds so weird. I still have more Bitcoin every month, but like
Yes, yeah,
exchanging some Bitcoin for fiat to pay some
of
bills.
course, yeah.
And I made that conscious decision of like, I do not want to have that. I use my Bitcoin as I want. But like why do you think is there like a magical like line between the Bitcoin CAGR?
So there's not a magical line. And there's other factors of what other debt you have and what schedule those are on, and is it fixed debt, and there's a lot of different things to think about there, but the general concept is that if your underlying collateral is growing faster than your debt, you can effectively do it forever. So if the increase in your debt is less than the increase in your collateral, then as long as that works for you, you can continue that into perpetuity. The problem is that, you know, Bitcoin's annual CAGR may be 45, 50%, but it's 300 one year, 200 one year, and then it's negative 75 another year. And so you could end up in a situation where you have that big down year or even down month or down quarter or whatever, and then you get caught off sides where now you're under collateralized. Your Bitcoin is now worth less than your debt, and that's when you get margin called, and then you get fully liquidated. And so it's not a perfect 1-to-1, and your leverage ratios would depend on other things, but it's just sort of a general concept that if you can grow your debt at a slower pace than the appreciation of your collateral, you can do that forever. That's sort of the general concept.
Interesting. Yeah, but I thought about it because I think it's highly unlikely that Bitcoin, like a 50% CAGR or like above 50% CAGR, like if someone had like 60% leverage, let's say they would need like a 75% CAGR, that to be continued within the next, like, I don't know, 10 years, very hard. I mean, I just had a podcast guest on like today. It will probably be already published since a few days.
Yeah.
That says like, oh, Bitcoin will double till ever every year. I'm like, I don't know. But outside of that situation, like a 55% CAGR, 60% CAGR, that would be huge.
Yeah, it's a massive, and like I said, it's, again, if you have a 60% CAGR and you're you know, depending on what if you're 65% levered, so 60 you're borrowing 65% of your Bitcoin stack, and then Bitcoin goes up six. So say you have $100,000 worth of Bitcoin, you're buying $65,000. So your Bitcoin then goes up 60% the next year, so it's 160,000. So now you're at 65 to 160,000, which is around 40%, something like that. So now you're repricing it. So if you stay there, you know, now you can withstand a like a 75% drawdown. But a lot of these companies, what they're going to want to do is increase it and then build their stack on top of it. So as they increase it, they try to add more Bitcoin. And that's where the trouble comes in, is if you get a drawdown of the Bitcoin to a point where it's lower than you're at the actual or excuse me, if the collateral value goes lower than your actual debt, or meets it, that's when you get margin called, and that's where the trouble comes in. So it's not a perfect, like, you know, CAGR's 29 and your leverage is 28. It's not exactly how it works, but just the general concept is that you're increasing your debt less than the value of Bitcoin is appreciating. Is the general concept.
Interesting. Yeah. So they're like, I find Bitcoin Treasury companies fascinating because there's a whole new world within Bitcoin, like very different people, very different vibe. And I do think there is a lot of like overlap between the ICO boom in 2017?
17.
And maybe also the NFT thing in 2021, and now like the treasury companies, which is a very big shame because I love seeing companies putting Bitcoin on the balance sheet. Like that's an amazing thing. I'm just not a fan of debt, but I guess if you use it in a smart way and you're doing it okay, like I'm fine with that. I think it's maybe I'm just hedging myself also because if I tell everyone like don't go to leverage, don't do that, that's always a safe way. Nobody will get wrecked if they don't use leverage. If I say like, oh, like leverage is okay, leverage is good, and someone, because of what I said, goes on to leverage and he gets wrecked, he's like, oh, like what? Why did you say that? Like, so like maybe it's just like also a kind of a hedge for myself.
Definitely the most conservative approach is don't use leverage. But Jack Mallers, I think, made the best analogy that leverage is like fire. It can heat your home or it can burn it to the ground. And it's a tool in the fiat system. Unfortunately, we all have bills to pay and other things like that. And some of us would rather borrow against our Bitcoin than sell it for many, many reasons. The least of which being is what we talked about earlier, that if you're borrowing less than the appreciation of your Bitcoin each year, well, you kept your Bitcoin and your debt's actually getting cheaper. So you can borrow to a certain point, and now you're having to repay less and less because your collateral is increasing at a greater amount than your debt. But that requires low leverage, careful precision, and being smart about it. And you could very easily see how someone gets addicted to clicking a button, having dollars in their account right away, and like, boom, we're going to go spend this, or maybe I wouldn't buy this, but hey, all I got to do is click this button and now I have this money available to me. And they get over levered and then get margin call and get liquidated. And now you have no Bitcoin.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.